Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. Yo, the market's on a heater, so get up out your seat or take a lap around the studio. Your ears up to the speaker. There's no one as elite like my machines are behind the meter, cause I'm shining. Always finding hashes like I'm grinding. The path to greater freedom is a road that's always winding, so I race it. Victory, I taste it. Lazy is a snake pit, but you gotta keep it real, cause facsimiles are fake. Shake and break the power of placebo. John Palmer trades every single hour on the Cboe. Some dummies call the corner bubble or flower, yo, but we know that there's more to what we're building than decentralized casino. I do it differently. Bring poetry to industry. So many financial instruments that you could call it symphony. My infantry is gallantry, infinity, and majesty. I'm savage with the passages when I'm rapping on Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. John Palmer, president of Cboe Digital Markets, is our guest. We're going to talk about the intersection of traditional markets, market structure, and crypto. It's a fascinating discussion. We'll also check with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk markets. And before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Let's hop right into the show. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So, Bitcoin, I guess, is technically flat a little bit, although we did earlier this week hit a yearly high of like nearly 53K, but now we're back in the 51 range. I mean, it's basically the same range. We've been over 50K for 9 consecutive days. Ether has outperformed a little bit in the last week or two.
Yeah.
But still, I would say below where it was the last time Bitcoin was at 50K. So still also kind of in its range in the scheme of things. So not a ton of news crypto major price action wise since we last spoke. Is that your view of the crypto markets at the moment?
Yeah, no, I would tell you that the price action we've seen over the past week is incredibly constructive.
Yeah.
Right? What you're seeing is an asset class maturing in front of, your face, basically. The ETF volumes have started to, materially, go higher. You've had consistent, inflows. Dips have been bought. And, in ETH, it's less institutional right now, but I think what's capturing folks with respect to ETH is kind of just the broader crypto narrative, right, around tokenization, stable coins. I mean, I can't tell you the amount of meetings that I'm just getting pulled into about this different effort, that other effort.
Yeah.
And it seems like now it's people have finally realized that it's here to last. It's not like some fad where, some bank or whatever random firm, for a year invests in it, and then the next year it's
or they do innovation theater, which I used to call it. No, it seems more durable now.
That is exactly how I would describe it.
Yeah.
It seems much more durable. And I think that makes folks very excited for, where ETH's going to be, on a go-forward basis. And then I genuinely think 3K is a big level. It's the highest level ETH has been at in
April 22.
Yeah,
basically.
And there's lots of good reasons for it. Eigenlayer has been really constructive. Bitcoin's been doing well.
So it's high beta. There's
wealth
the
effect,
restaking situation.
Yeah, supply that's getting staked.
And it's been. I would point out too. I think our audience will know this, but I mean, Bitcoin is, I would say, more predictably scarce, certainly, than ETH, but ETH has been basically flat supply for years now, and so it's also scarce, is my point. So if demand increases, it can.
But the other thing is just the culture of asset allocation in the U.S., right? People just buy and hold. And normally, in equity world, in fixed income, and part of it's one, if you sell something, that's a taxable event. But two, a lot of people are invested in stuff to hedge themselves versus fiat debasement. People are always afraid of that.
Right.
Anyway, with ETH, you've had a ton of bag holders that just haven't sold through many cycles, and I'd say the underperformance of ETH relative to Bitcoin, you can assign some of it to just how much was in bankruptcy estates. Celsius was selling a ton, and you could see it on chain every day. So there was always all this supply. But now, that's kind of cleared up a little bit, and it looks like an asset that's just like run out of sellers.
Yeah.
And you have like a bit of marginal flow, and markets that get set at the margin. And, there are tactical guys and crypto native hedge funds, et cetera, playing for swings here and there. But broadly, like ETH is in the big asset game now, with Bitcoin. And what do people do? They just buy, hold, accumulate. And there's tons of ETH maxis, et cetera.
For sure. Big community.
Sound money and all of that.
They have interesting technology narrative with the L2s
yeah,
really
it's got a
being
story,
used.
it's got a chart, there flows. Like,
right.
It's trading well. And I rarely allow myself to get there in terms of, I'm moving on to Bitcoin now, but, I rarely let myself go there in terms of like right tail stuff.
Yeah.
Like, the analysts on TV calling for 250 grand and $1 million. Like, I try to be a little bit more pragmatic about, market expectations, but it's really hard not to think what the future value of Bitcoin is going to be based on the current like supply dynamics that we know about right now. Like in terms of just the flows we've had so far are exceptional, I would say, at this point. They weren't at the start. And that's without Bitcoin ETFs being in all the platforms, right? Without the distribution of the entire U.S.,
wealth management platforms,
all,
banks, broker-dealers,
et cetera. And so I think you're just kind of at the tip of the iceberg with respect to, how far-reaching this ETF product is going to be. And to go along with that, you have the supply of the halving, right? Like literally, like supply, is gonna come down, and so it just kind of seems like one of those things that's just always gonna have marginal buyers, and really not that much in terms of sellers. It could be speculators selling, et cetera. But
one of the other sort of this year questions has been rates, right?
Absolutely.
And we know we have the halving. I love your point about the advisor platforms. Not even. I mean, we've said this over the last couple of weeks, but like frankly, surprised, obviously, happily surprised with the volumes and inflows that we've seen in the ETFs even before this main market for them comes online. That's just great. That just makes me even more bullish. And that's a major one, the catalyst of various large bank or broker-dealer wealth management platform turning on Bitcoin ETFs is going to be a drip, drip, drip that you hear over the next 12 to 18 and 24 months. But the halving is a big narrative event, and I've always been of the view, especially this is what happened in 2020, right, was the monetary easing, historic, arbitrary, crazy levels, at the same time that Bitcoin, credible, neutral, predictable, tightens. You had been for a while in the fall and earlier this year, it looked like the same dynamic was going to happen. Obviously, the easing that we're expecting is not nearly what happened in COVID, but that arbitrary, human-designed, controlled rate cuts and maybe balance sheet runoffs and easing would occur at the same time as the halving again.
Yeah.
Now we're going to have the halving. It looks like rate cuts won't happen at that time, right?
Yeah, so most likely May or June will be the first.
Well, if it's May, that's still kind of right there. I mean, we're looking at April 20th or 19th for the halving. But my question is, are you surprised to see Bitcoin's performance in the face of what Fed funds rate at 5.25? Like rates are so high, but Bitcoin's almost at all-time highs. One, do we need cuts? Two, is it better to have them sooner or later? Because I was thinking maybe even later is better since it's doing great with it here. It's like gives it a second shot if it. Yeah. What are your thoughts on that timing and stuff?
So in terms of one, like, does the economy need cuts? And that's up for debate. The current data says you don't need them, right? Employment's incredibly, contained or low, and prices, there's still upside risk to inflation, at least as far as we can tell right now. And so it's really up for debate. I tell you the best logic for cutting is that stuff has normalized and you are at restrictive levels and you're, let's say 200 basis points above restrictive. So you probably, if your policy objectives are met, you want to get to neutral and you're not at neutral.
Right.
And then your risks are, if you think your risk is more tilted towards a hard landing or unemployment ticking higher, then you should probably start cutting before that turn happens. And so that's the logic with rate cuts. And, I think it's going to be an important driver for markets, but I tell you the scenarios are already like baked in to a certain extent, right? We've gone from a market that prices in 7 cuts to closer to 3.4, right? And you've kind of established that range. And so if you go back to pricing in a lot more cuts, like that's probably going to be because the economy has turned, and maybe stocks will do well in that environment. They most likely will, because they do well in any environment, it seems like right now. But that's kind of where you are. I'd say the bigger thing for me, in terms of monetary policy that I think hits home, even more with respect to Bitcoin is the balance sheet management, right? If we live in a world where everybody, is forced to recognize the fact that we are basically not going to be able to reduce the balance sheet at a certain point, and that ultimately, because of the fiscal situation, that the balance sheet has to be ever expanding on a go-forward basis. Like the moment where we're just like printing money to buy our own debt to go, spend money on
social
all the
programs,
official,
any type of programs,
any
wars,
program,
who knows what,
whatever.
Yeah,
and it's just that I think will kind of drive the message home about fiat debasement, right? It's
perpetual and inevitable in this current system.
I couldn't have said it better myself. I mean, perpetual and inevitable.
Yeah.
And so it's a matter of time before that happens. And I think, that balance sheet policy shift is kind of what I'm more focused on.
So that might be the second shot when we
correct.
It's both when we see it, but also when it becomes like understood that that's what's going to happen.
But at the end of the day, I could tell you that, macro markets are the most important thing. And like if NASDAQ crashes 5%, Bitcoin will crash 5%. Like, that stuff is mostly true. But I think you really have to think about Bitcoin in isolation. And there's a whole investor base that wasn't able to get access before that is just getting access. Markets move at the margin. And if there are going to be more marginal buyers and sellers on a consistent basis for Bitcoin, the price needs to go a lot higher.
Yep.
And that's kind of where we're at. And you could talk to people on either end of the monetary policy spectrum, and I don't think it would sway you on, where Bitcoin prices are headed. Like I've talked to macro guys that are super hawkish and super dovish, but most of them are pretty bullish Bitcoin, and they wish they had more.
Yep, I hear you. Well, Beimnet Abebe, my friend from Galaxy Trading, as always, thank you so much.
Pleasure.
Let's go now to our guest, John Palmer, president of Cboe Digital Markets. John, welcome to Galaxy Brains.
Alex, thanks for having me on.
I'm really excited to have John on because Cboe is one of the most storied and oldest derivatives and spot and equity exchanges in the world, a staple in Chicago. Some of our audience may have recently heard of Cboe just very recently in crypto because several of the Bitcoin spot ETFs trade on Cboe's BZX exchange. But Cboe was early to add Bitcoin futures markets. But Cboe Digital is something new and a little bit different. I think it's really interesting. So we're going to get into it with John. But before we do that, John, tell the audience who you are and what your background is and how you got interested in Bitcoin and crypto.
Yeah, thanks, Alex. So background, basically been building exchanges really since out of school. Was a quant by education, and then just decided that I liked the intersection of tech and business and trading, and kind of fell into product management and kind of just started building from there. Most of my career has been on the equity derivative side. I joined Cboe through the BATS acquisition back in 2016, having helped them build out some of the options exchanges. Spent a little bit of time migrating some of the stuff that Cboe was operating over to BATS technology.
Yep.
That's when I got into futures, which we'll talk about with Cboe being the first Bitcoin futures contract in I think 2018 or late 2017. Yeah, if I get my numbers right.
I think there was a whole thing that I think actually if you look at that December 17 like parabolic move in Bitcoin, it peaked at Cboe futures launch. Yeah. So people were like, oh no, is it bearish?
Right, it was a race between CME and Cboe. We won at least the first leg of that race.
Yep.
I remember all my buddies were buying Bitcoin at the time. Not to tangent too much, but they're like, "What do you think about this?" I'm like, "It's a bearish opportunity because now people can sell it. You could only buy Bitcoin before, right? Now actually, folks can sell it. So be careful.
Yeah.
Right. And they're like, I don't understand what that means, because they don't work in markets. And so I was just
you can definitely short it in a way that you really couldn't before, for sure. 100%, right.
100%. Anyway, 17, moved in the options, ran the options business for Cboe for a number of years. Jumped into crypto in 21. Did a stint at a startup in Bermuda. building international derivatives exchange for institutional participants for just shy of a year. And then Cboe had bought ErisX, which became Cboe Digital. And that deal was in May of 22 when it finalized. And so I came back to rejoin Cboe and run the digital effort. So boomerang employee, as I like to term it. Some people think that's funny and some people don't, but it is what it is.
Well, I mean, I love the story. And ErisX, I think, was one of the original institutional grade spot markets for Bitcoin and other digital assets. We interacted with them when I was at Fidelity for a long time, and so interesting that now at Cboe makes a lot of sense. They had built great institutional trading tech at a time when, and I think this is where we're going to really start going in this conversation. But at a time when, if you think about the 2017 rally in crypto assets bubble, if you want to call it that. I don't call it that because you don't get multiple bubbles over a decade.
In the same asset?
Doesn't make sense. Yeah, it's not a tulip. I mean, show me where tulips went up again. I saw a recent chart actually where I think BOA put out a chart about like various bubbles over the last 20 years, and they have like China and then like housing and like China and then they had tech and then they had Bitcoin and then now they have AI, and I'm like, wait, so you're just looking at the one from 21 and calling that the Bitcoin bubble, but like you used to call the other one, or what about the one even before that? That's a little bit of a tangent, but that move, that rally throughout 2017 happened on the back of very scant market infrastructure. It was exchanges like Poloniex and Bitstamp, and some of these are still around. I'm not saying they're not relevant now, but that was like all there was. There was Coinbase, right? There was no institutional custody. There was no institutional settlement. There was no institutional market. And Eris and others were born out of that, along with many other types of companies. Galaxy was founded at the end of that, like all the lending companies, all the institutional custody companies, right? So there was clear market need was defined. So that was it's 24. That was 6 years ago? 7 years ago.
I had to do the math. I was like, wow.
7 years ago. How far has that nascent and then direly needed institutional exchange infrastructure come in those last 7 years?
Yeah, no, it's crazy to think about how things have changed in the crypto space over those 7 years, and I'm sure we're going to get into a lot of it today. From our perspective, how much has changed? I think we're just now really seeing that adoption that I think, ErisX was formed, and what Cboe Digital is really about even today back in 17 was, providing an ecosystem, an experience platform that institutions that were trading other highly liquid asset classes in the U.S. are used to, right? And so when you think about that, you think about like some really small nuances like bare metal matching engines that accept fix or binary APIs that allow people to co-locate. And when you look at 2017, like everything was WebSocket and REST API installed. There's a lot of that, and it's used, but if you're latency sensitive, right, you want co-locate, you want probably something even better than fix, but you'll take fix if that's all you have. And so that was what it was founded for. And so I think we've seen the industry start to come that way more and more every, call it 6 or 8 months, but it's taken a while. Yeah. Right. And so it's really interesting to see some of the pain points that institutions have over that lifetime of that 6 years. Obviously, I wasn't a part of the team for the whole 6 years. So the pain points in 18 and 19 are certainly different than the pain points now. But I think as an industry, whether it's U.S. international, we're slowly like, you run into a pain point, then we solve it, run into a pain point, we solve it. But that cycle is like an 8 to 12 month solving cycle, right?
Yeah, one of the things that's so interesting about the exchange space, many things are, but one that I'm coming to mind at the moment is that exchanges are, and equities are regulated by the SEC, right? The Exchange Act governs exchanges. Now, without getting into too much about like why this is or not, but like digital assets are broadly not regulated by the SEC, despite the SEC says they're all crypto asset securities, and if that were true, then they would have jurisdiction. And there's a lot of lawsuits about this. Our audience knows well. How does Cboe Digital, though, approach that? I mean, either in which assets you do trade and list, with what is the broad, not negotiation, but posture with regulators as obviously a traditionally regulated broader organization?
Yeah, so it's a really important point. I think there's 4,000, 5,000, I don't know how many coins out there in the world.
I bet you it's like 100,000
changes.
right now.
Yeah, who knows?
I don't even look. I mean,
maybe you could say like the top 100 are the most liquid,
Sure.
and even then the top 20 is
Right.
and then even then most of
Totally.
most of it's in Bitcoin and Ether.
Yeah.
Right. And so when we look at the tradable universe, we only list 5 coins today, right? And it's Bitcoin, it's ETH, it's Bitcoin Cash, Litecoin, and then USDC,
Yep.
Stablecoin. And that approach has been conservative, right, compared to a lot of other platforms. And we've done it intentionally that way because the lack of clarity, right, in terms of, we don't know what is or isn't. And even though there may be some demand for especially some of the more popular layer ones
Yep.
out there, the risk isn't worth the reward at this point. And so we're waiting kind of for that clarity to be able to offer that, to our customers
Yep.
in a box. I'll call it a box, whatever box it is, whether it's a SEC, CFTC, some new
whatever the
entity
guidance is.
Just give me a box, tell me what the rules
how to-
are,
how
and
to
then
play.
we're gonna, we operate 28 markets under the Cboe umbrella globally, so and they're all regulated in some way, shape, or form,
And probably all slightly differently.
And
so
they're all a little bit
you can
different.
certainly handle.
so we can figure it out.
It's just there aren't any rules really exactly. I mean, obviously there are some that apply here and there, but in terms of market regulation, it's really not clear which you're supposed to. I used to call those the PayPal 5, right? The one that I didn't hear, I think, was it, did you say Litecoin?
We do, yep, Litecoin's on there.
What's the one? Dogecoin. No
Yeah,
Dogecoin?
we don't have no Dogecoin.
Doge, totally legit in my view here. It's a Bitcoin fork. It has no pre-mined supply. It's proof of work, right? Anyway, you should consider listing Dogecoin.
I'll put you in touch with my team.
I'm a big fan of
have to-
dog money in general. I think dogs deserve their own decentralized cryptocurrency.
You convince them, I'll list it.
But I totally get that because that list has sort of been long adopted by other players like Cboe, where it's most of them they're all Bitcoin forks except for Ethereum, and they have more regulatory clarity, I would just say, than further down the list. Certainly the 2017 ICO coins or the 2020 and later like venture-backed coins, all much trickier, I think, from a fact pattern standpoint. I don't think personally they're securities, but I mean, it's much different than looking at a Bitcoin or a Bitcoin fork, right? So makes sense. So what other interesting, you're talking about bare metal and latency. This is something really interesting. Does your Cboe Digital, do you see like high frequency trading? Is that something that's going to start? You can't really do it well with WebSocket and sort of traditional internet architecture. But obviously Wall Street and Chicago trading venues have enabled high-speed trading for years. It's a big feature in markets. I think some of the most profitable and valuable trading companies in the world are high-speed trading firms. Is that something that's going to come at scale? Do you see it already? Is that like a key constituency that you build for?
Yeah, I do think we see it already, and kind of we can always divide it in two camps, right? You have the quote unquote high frequency trading when people think about like the takers, the folks that are removing the market, right, and acting on market news as quickly as possible, and being able to say I have an opportunity at this price, I want to hit that price. But you also have the market makers on the other side of that also have to adjust to that market news. And from that perspective, when you think about how much global fragmented liquidity and market data there is in crypto, it's actually, in my opinion, more important to be able to support that type of infrastructure for those participants because they want to be able to act on news or a funding rate change in some perpetual in the international space to be able to update maybe how they view the spot market.
Interesting.
Right?
So more news even and harder to find news makes it even maybe more needed.
Correct.
I guess because if you're following U.S. equities and trading those at high speed, like all the news is coming from one or two locations. You don't need Mandarin speaker to know what's going on with like a top, U.S. tech company. Well, maybe you do.
I'm not a market maker, so
I don't either. I mean, I don't know. So but,
I'm not sure where they're getting
the
their
global
news,
nature conglomerating now into a high speed institutional grade exchange is interesting. Are you seeing uptick in volume overall over time? We were talking before we started recording about how the Bitcoin spot ETFs have increased the U.S. liquidity, have increased liquidity in general for Bitcoin, but also increased the U.S. exchange market share. Mm-hmm. Are you seeing some of that in general? And if so, what are the drivers in your mind? I mean, ETFs are one that I mentioned, but is it general institutional interest?
Yeah, I think it's a couple things you've mentioned. So, to answer your earlier question, yes, we are seeing some increase. And just to kind of, we don't publish monthly or daily stats. although there's a public WebSocket that anyone can go ahead and kind of look at the data you want to see it if you're interested. But when we closed the deal, call it summer of 22, we were doing maybe 5 or 7 million a day. And now we're doing, I think yesterday we did over 200 million, and that's, up and down. It's not, flat 200 million every single day, but we've been in that ballpark for now, really, leading into the ETF approval and post the ETF approval. And we had pockets of that even last year. So we've had a really great ramp, as we've onboarded more and more institutional participants. And I think we're going to continue to see that ramp. We have a really great pipeline. I think interest is peaked. I would say we always see interest peak when the price rises, generally, as people kind of tend to engage more when there's a rally, and tend to pull back maybe when there's a sustained, kind of bear market.
Yeah.
And that's just kind of how we've seen it. But the ETF approval also has driven quite a lot of interest, and it's interest from new participants, but it's also interest from existing participants, because now you have a whole nother ecosystem built on top of the spot market, and those participants want to hedge.
Yeah.
Right. If I'm making a market in an ETF, I need to be able to hedge my exposure. A lot of them are going to go to the spot market, and they look for markets and counterparties that they know and they trust. And so that's where we really see the opportunity.
And can you connect into Cboe Digital through traditional, traditional screens, basically? Like if I'm a traditional trader, or is it some new bespoke architecture? For example, if I connect to a crypto exchange, it's not on my traditional OMS, or it's not on my traditional Bloomberg or whatever. Is that something you guys offer?
Yeah, there's still some integration depending on where, but the way we structured it, especially being built kind of around FIX, is to provide that kind of connectivity. So that way, if you're a traditional OMS and the majority of connections you use is likely FIX, the integration is low, right? So then it just says, and then it's more of just an opportunity.
It's almost like plugging into any traditional venue.
Right, but we're connected to a lot of different ISVs, both traditional and crypto native, right? So if you're using a TT, or you're using a Talos, or you're using a CQG, or even other platforms that are very, call it Tradfi, in terms of, being able to access some of the other markets, whether they're futures, derivatives, or even spot markets, you can access Cboe Digital through those. Nice,
that makes sense. It's so funny. I think about Sam Bankman-Fried, not to praise Sam, but FTX was, it was sort of hacked together, right? And it was, people originally thought the tech was good. Then, of course, we then used to see plenty of rumblings. Oh, it's down, it won't work, whatever, just from traders complaining it didn't work that well. Then, of course, it came out throughout the trial and the unwind there that actually they their supposed famed liquidation engine didn't even exist, right? Just drawing a comparison between so many times in crypto, you've got in some cases very brilliant people, but with no real markets experience, maybe great coders or in some cases cryptographers. You see this across DeFi that we tend to reinvent the history of financial services. It's like speed running the entire history, right? Yeah. Without sometimes learning the lessons that finance and trading learned over the centuries, right? And that can be a real loss. One example is that they call tokenized assets from the real world, they call them real world assets, RWA, but that term already exists, right? It's like they weren't aware that RWAs are already a thing. I make this point a little bit long-windedly to say that it's really, I think, refreshing and nice to finally have exchanges and venues that aren't built by neophytes to the trading world, that are bringing some of the long time. We want innovation, and crypto and Bitcoin is certainly new and disruptive, but there's still things that we can learn from the traditional world.
That's funny. I wrote a piece about a year ago. I put it on LinkedIn, and I think at the end we said, what's the next big thing in crypto, right? And I said traditional finance, and I got a lot of people that laughed at that. And I said, but in all honesty, sometimes you have to crawl before you run. And most of the time you do, unless you're going to be a world-class track athlete, and you just you come out of the gate running or something like that. But I view that as kind of bringing in the market structure, the way traditional finance has kind of approached running markets, with different participants doing different types of things, all for a purpose. Because if we want to bring them on this journey with us, right, which I think we all do because of similar to what's happening with the spot ETF, the amount of opportunity it brings into the ecosystem in terms of capital, right? You're going to need to make it look similar to what they're already doing. And it's not because we want to, it's because there's a risk team, there's a compliance team, there's an operational team at that entity that may not be willing to sign off on the change, right? Because there's a security risk or there's a operational lift that's over and above what they typically do, right? And so there's all these other pieces outside of the commercial business opportunity that we need to solve. And so the more you make it look, feel, and be the same as an equity trade or a derivatives trade, the more likely you're going to be able to bring them on the journey, right? And then, sure, we can innovate. We can look for opportunities to make the infrastructure, the value chain streamlined, more efficient, on-chain, off-chain, public versus private chain. We can have all these conversations, but it's better to have most of those folks in on the journey and solve it with them than try to solve it and then bring them this, I flipped the entire structure on its head, and now I want you to change the way you completely do your business. I think that's a really hard sell.
So one example of building the crypto, and it's innovative and different, but trying to bring it to the TradFi, but it doesn't jive, is things like settlement and custody. Custody is one example where, sure, you're safe keeping a record. It's in that way it's the same, but the record data structure is different. The settlement finality is different, right? So it's key material, and it's not like a whatever it is that a equity share is. Ultimately it's at your BD, but it's also at the DTC, who knows? So trying to force that in is very difficult for people. And it wasn't even until, Fidelity was one of the first that launched an institutional custodian for this reason. This was something that we and others, certainly not just me, but when I was there, it was decided this was like one of the clearest base case market needs. Because trying to force people into that new thing was very difficult. Has that improved? And on those two examples specifically, like settlement, there was a company in Chicago I knew for a long time, and many attempts at like some kind of central clearing and settlement thing, but either it required a lot of capital and don't want to trust a startup to like be that. And then people said maybe it should be a consortium of, I don't know, all the exchanges or all the custodians or all the whatevers, and everyone's trying to build a network. And then has that improved?
Yeah, I think we've certainly come a long way from where we were in 17 or even 14 or 2010. If you really think about how, you go back and watch your Netflix shows and you learn about, I can't remember the Canadian exchange that they have at
Quadriga CX.
Yes, that one. Yes, Quadriga. Exactly. So I watched that one.
That was a mystery
during my journey, just to kind of like, wow, I didn't really know about it at the time.
Yeah, right? Yeah.
But looking back, through the lens, obviously it's easy to be, Monday morning quarterback and be like, oh, we should have done it that way and that way. But I think we've come a long way. But it's different. So it's the way you custody equity is likely different than the way you're going to have to custody crypto. You've mentioned, obviously the key material and those types of deals. Whether or not we see the same market structure or the end state market structure in crypto as we see in kind of equities today, I think is where everybody is maybe butting heads. But I do think making it as agnostic and is similar for those traditional entities to be able to enter is important, meaning they have choice in custodian today in a lot of the assets they use. They have choice in prime broker. They have choice in the way they execute, who they execute through, all how they get borrow, lend, financing, all the kind of things. I still don't think there's enough of that in the crypto ecosystem, and maybe it's from their lens. I would say maybe not enough of the same players. So over time, as those players start to enter digital assets, whether it's crypto or real world assets or whatever, we'll start to see those services being offered, and I think that'll unlock a lot of it. The challenge from an exchange perspective I've looked at is those things didn't exist when platforms, I'll call them platforms, right? Because they're doing a lot of different things other than just being an exchange, were created. So you had to have a wallet. Right. You had to custody assets.
You had to pre-fund your account. Right.
Whether you're a custodian or not, or a qualified custodian or not even, you still had to have a wallet where people gave you coin and even dollars before you could really do anything on the platform. We're still really there, though we've seen in the last, I call it 12 months, some really great, I wouldn't call it innovation, but really great development in that space where now you have like the Go network, a Copper Clear Loop.
Yep.
You're starting to see these kind of like networks of custodians and exchanges where now all of a sudden you can trade without moving your coin, which I think is important because maybe not everybody's level of trust is different. And who am I to say you should trust me? Well, maybe you don't want to. And if I want to compete for your business and I want to operate an exchange, I can't look at any other exchange that I'm used to running or building that holds the asset class. So I kind of say, maybe I shouldn't hold it, right? But there's a transitionary period there, and I think we're starting to be in that. Where the end state is, I think is really interesting. But this whole concept of self-custody or being able to trade out of your cold wallets, I think is the right direction for the ecosystem, but it's still an island approach. You have islands, and we need to solve all the islands. And obviously who does that eloquently and with the least amount of friction for the end customer will have a really interesting product.
Yeah, that'd be a big company or consortium or whatever it is. Right, you don't send your Apple stock to NYSE if you want to sell it. Right? There's a settlement cycle, and I don't know. But as a necessary, that didn't exist. So every crypto exchange, every crypto platform now, because they're not all like this, to your point, but were custodians by de facto custodians, right? They had to, and it's not just, you don't want to. Exchanges historically don't do that, so. I can see why you wouldn't want to, but also the SEC's new custody rule proposal actually requires that advisors don't pre-fund, or that what it requires is that all these assets stay in qualified custody.
Right.
So that it should be pushing further in that direction, right?
Yeah.
Are we getting close? You mentioned a couple examples. I mean, can we trade now, depending on if my setup is correct, on Cboe Digital without pre-funding, basically, and settling?
Not yet.
Not
yet, right? So I would say not yet, but I think that's the evolution, right? And I think as we see these, so from our perspective, we're watching that, right? And I think as we see those expand, we want to embrace them. Ultimately, that's where I want to go, in the sense of I don't want to hold coin or dollars. For that
you just
matter.
want to match
I
trades,
just want to match trades
execution,
and clear trades, which I think is interesting because we haven't talked about this yet.
Yeah, what does this mean, by the way? Can you explain to the audience what clearing is?
So clearing is that part of like the exchange plumbing or financial market plumbing, as I call it, that always gets overlooked a little bit. And that's this concept of you have a trade match, right? And that technology is can be advanced or can be pretty simple. But the concept of clearing is actually saying, okay, yes, I have some relationship or I have the assets, and I actually can make sure the trade happens, right? It's settled. You give me your Bitcoin and I give you dollars, right? If there's no one in between, who hits go first? Yeah. Right. If I'm clearing it in between, then you and I can trade, and I can trust on this entity, this third party entity, to make sure that all this happens. And if it doesn't happen, that clearinghouse stands in the middle. Yeah. Right. So if you default and you didn't give me the coin, the clearinghouse is going to make sure I get the coin. Yeah. Right. And so that,
and maybe they take recourse against the broken side of the trade or something.
And if you think about equties, there's multiple parties in between all of that. It's not just me and you and a third party, right? There's prime brokers, there's clearing brokers, there's retail brokers, and maybe it's the same entity, maybe it's multiple entities. That doesn't really exist yet in crypto. One of the things that we are working on at Cboe Digital is that concept of a CCP for crypto assets. And we're really already doing it today, in the sense that we have two legal entities. One runs the exchange, one runs the clearinghouse, we call it, where everything is cleared and settled and where all the licenses are. And what we are now starting to do is clear for other platforms, right? So if you want to stand up just an exchange or just an ECN, but you don't want to deal with the clearing and settlement, you can send the trades to us and we'll clear it.
That's cool. And Cboe has a trusted brand and size to because that's part of it, is it's almost like an escrow clearing, right? So it's sort of like, this is one of the things I was alluding to when some of the startups wanted to solve this problem. And it's kind of like, well, why would us two big traders, let's say we're big traders, why would we meet at like little bitty startup to do that for us? Like, don't you want some capital, some experience, some name, some reputation behind that central? I mean, because that is by definition a trusted third party, right?
Right. And so you start that with, it's all pre-funded today, right? So the risk is pretty low, obviously, but for the participant, you have counterparty risk in the sense that you're giving someone, in this case, Cboe Digital, the assets. But ultimately, being able to do that where now I no longer hold the assets and those assets are held at some third-party custodian is kind of like what I'll call that utopia. Right. But really, it's not anything new. It's the way equity markets have functioned for decades upon decades. And so I think that evolution will bring a tremendous amount of buy-side entrants that are standing on the fences saying, I'm trading derivatives because it's fully regulated, it's structured different, and I'm comfortable with it, but I'm not trading spot because of some of those concerns that would be solved by that.
One of the barriers has been that again it comes to regulatory, is that the traditional custodians and traditional exchanges that have already built all of this stuff, I think for the most part, we're talking a lot of times about messages. It's electronic messaging. Most of these processes, obviously on one end, you do have settlement and delivery of a different type of asset. So there's some tech that's crypto native, but the matching engines, there's tons of those, right? Like you said, they can be simple, complex, but like it's a relatively solved problem.
Yep.
Some of that is like out of the box technology. Clearing, it's trust. There's probably tech for that too, but again, it's not. It doesn't really matter what you're clearing as long as both parties know about it and can agree to it, and the third party can clear it. But because there hasn't been regulated custodians, like the existing regular custodians, the big banks, the ones that custody equities, they're not allowed to touch crypto. So none of the crypto settlement like evolution could go through their existing pipes, basically.
Well, they could. I think there's just been some strong guidance that potentially might hinder
that's sort
the
of what I
commercial
mean.
opportunity, right? Because, we could elephant in the room, maybe it's a SAB 121, but if I'm running a business not an exchange business, and I need to custody a customer's assets, and I need to hold that as a liability on my balance sheet.
And if you have bank capital requirements.
Right, exactly. Now you've nailed it. Now all of a sudden I need to park a bunch of capital in some account that I'm earning very limited interest, if any, on it, just because I'm holding a customer's, crypto assets in this case. It makes the business case that much harder.
Yeah. I mean,
that entity needs to be able to make money.
Impossible in the scheme of things.
Yeah. And so that's
even if you're not a bank, you could broker dealers also custody, but the broker dealer guidances and stuff have been scant as well.
It's been difficult.
All right, let me get like a little nerdy with you, because I wanted to ask you about Best X, the Reg NMS rule that. Well, first, maybe you can tell us what that is, but I want to ask you how it applies to crypto, if at all. I don't think it actually technically really would apply yet. Yeah. But is there even a concept of it in crypto? But maybe you can explain what it is in the first place.
High level, put my equity hat on, though I would always say I was in equity derivatives, and the market structure there is very different than equities, not to get even nerdier here on this stuff. But, Best X essentially is a requirement on your broker-dealer to make sure that you get the best price that's available at the time, right? So if Bitcoin's trading at 50,000 as an example to use for Bitcoin, but you bought it at 51,000, that sounds like a bad trade, right? Like you just spent an extra $1,000 if you're buying a whole Bitcoin. You probably don't want to spend that extra $1,000, and so I think how you execute crypto is different in the sense that you go to one place today, right? You go to a platform and you get their market. Right? And that's the price you get. What if it was trading at a different price on a different platform? You have to go on board there, then you have to deal with the routing, and then the whole world gets very complex, and then you have capital issues because maybe those are all pre-funded, and so how do you manage all that, right? It becomes very complex. That's where we like our setup. Obviously, I'm biased, but being an intermediary, we don't want retail to. We don't onboard retail. So you would go through a retail broker or another intermediary, and then they would be able to access our platform and likely other places. And then they could amalgamate all the prices and then try to, give you the best offer to buy your Bitcoin at. But I think we're still in the very early stage. There are some places that do it, right? But it's not required at the regulatory level.
And it is tricky because Bitcoin's a global asset, right?
Yeah, it is really hard.
And there have historically been some they're idiosyncratic usually when they happen, but there have been dislocations between global markets as well. But that makes it tricky. I think of Bitcoin and really all of crypto because of its seamless global nature, because it really runs on the internet, which is global. More like a commodity in terms of how it trades, maybe in other ways too, but in terms of how it trades, a major equity will actually in the end trade on one exchange, right? So you do the execution ultimately happens. You can go to dark pools and these other types of execution venues, but like eventually it all hits like the New York Stock Exchange or Cboe BZX or something, right? Or does some trade on multiple?
You can. I mean, and the equity market structure is there's a lot of places you can execute, and then everything gets reported right to the tape, and so you can see all the trades, right? So that's also
there's some transparency,
right?
Yeah.
There's a global price feed where you can see all the prices from all the exchanges.
We don't really have that.
We don't really have. There's so many things that the crypto industry doesn't necessarily have. Whether or not good or bad, we should have them. There's probably you can line up on both sides of that argument, right? We're just not there.
Yeah.
And again, the globalization, I think, is tricky. Do you have like a U.S. only best X? And then what happens if there's dislocations between the U.S. and Europe? Whose
fault is that?
And who's going to trade that dislocation because it's an ARB? And ideally, you would want folks doing that so that way the global prices align.
But like, is there best X requirement or expectation for something like spot gold?
I don't think so.
I don't think
but
so
I'm
either.
not going to say that I truly know that I.
Yeah,
that
I just know that this rule that we're talking about is
probably
specifically an SEC rule,
yeah,
so it wouldn't
similar
apply to
issue.
gold. But
Right.
I'm not sure. I actually don't. You're right. I do not actually know if the CFTC has put something up. But I honestly can't imagine that you could, because gold is traded at pawn shops, at gold dealers. I mean, Tiffany's is one of the biggest sellers of gold, right?
Yeah.
Like commodities don't like trade in sort of one market. You can mine gold anywhere on earth. You can farm corn on anywhere on earth, right? So like how those markets I think tend to be much more dislocated in terms of price geographically, simply because they're physical things in different parts of the world.
Yeah.
And while Bitcoin is not physical in that sense, and it's certainly moves more freely across borders, it is global in that way. So it'd be like hard pressed for me to tell you what like the central most, the most like top of book, like tightest bid ask spread in all of crypto is. Like it's not, it probably changes a lot. It's really not clear. Then you have FX involved too, so it gets tricky.
Right, and then you have the stable coins, and like, do you link the books? Do you do a risk haircut on any of the stable coins?
Yeah,
it starts to get really, really nerdy.
So I'm going to go to this because I know you mentioned USDC as one of the coins that you guys have on the platform. But before that, I want to ask another. Well, what about things? We talked a lot about what TradFi market structure and technologies and in general can bring to crypto markets. That's, I think, obviously it was a core value proposition for ErisX, and I know for Cboe Digital now too. What about things that crypto can bring to TradFi? And one that I want to ask you about is the perpetual swap.
Oh, yeah.
I think this is a brilliant financial instrument. We don't have it in traditional markets. Do you have any view on why, or if we might ever? I know this is one where it feels to me now, it wasn't invented by crypto, but I think it was first implemented by BitMEX. Like, so there's actually I looked into this once. There's an academic paper invented it in like the 90s, but I think Arthur Hayes is basically the first person to actually do it.
Sure.
And now, of course, it's integral to crypto markets.
Yep.
Could we ever see that in TradFi markets?
Yeah, it's interesting. I think they're called perpetual futures, right, on a lot of platforms, but you nailed it. They're swaps, right? It's a bilateral exchange of the funding amount between the buyer and the seller, and the platform is really just a tech provider between that funding, right? And I think that the swap is the key part. In the U.S. now, you're talking about the CFTC and the regulations around swap dealers or swap execution facility thefts and their reporting and then the question really are the retail brokers that are facing the customers going to offer, or can they offer, or would they be willing?
Right.
Maybe is a better question. I can't say whether they can or can't.
Yeah.
A swap to their customers, right? There's obviously different risks associated with swaps, and there are listed cleared contracts. Even swaps can be cleared, but they don't have to be centrally cleared. And so you get into all these little nuances that is probably, I'm going to guess, I'm going to go out on a limb on that one and say is why most FCMs and brokers are not offering swaps to their customers, because there's very liquid swap markets today, interest rate swaps. And so you could get sophisticated traders that understand the risks and are willing to take the risks, probably access to swaps if you wanted. And I'm sure there's ways you can get access to them if that's really what you want as an individual investor. What crypto has done is really brought the retail traders into this concept of swaps with this perpetual. And from my preview, I would say it's because of the leverage. So you get a similar asset that looks like the spot market, doesn't expire, trades at a little bit of a basis depending on the structure of the product, and now you get some leverage.
Yeah.
And then obviously depending on where you go and what platform, you can get extreme leverage, right?
Yeah.
And so now you can kind of, get the type of different exposure that you want. And I think what we've struggled with in the U.S. Is probably seeing the same amount of retail engagement in quote unquote futures markets as we see in kind of equity derivative markets.
Yeah.
So, why are single stock options and index equity options so popular, and why aren't options on futures as popular? And maybe it's the product, maybe it's the structure. Again, not a good question, not for today to solve, and I'm probably not the right person to answer that. But that's the phenomena that we've seen, and obviously huge amount of demand, huge amount of volume trading in those internationally.
Oh, yeah.
So I think something has to give, right? Either, we need to see those participants offer swaps to the retail somehow with, those with venues like a Cboe Digital potentially offering that swap and, being it probably centrally cleared for capital efficiencies and things like that. Or it's got to be a different product.
Yeah.
Right. It's got to be structured a different way. And I think it's a challenge. You also have a futures market that's been sitting around for 50 plus years that there's a role. Right. And there's commercials around the role in terms of who's making money in the role. And so there's also now all of a sudden, if I can get exposure and I don't ever have to roll, for me, if I'm a trader, it's probably cheaper, though I might pay more in premium, maybe in terms of price difference, maybe not, I don't know. But everybody else that's charging commissions, fees along the way is going to lose out on that. So what does the real market look like? Is the fee higher?
Yeah.
Is the premium higher? There's obviously a cannibalization potential there for anyone that's offering futures contracts. Obviously, we have, we have those same contracts expire every 1 month, 3 months.
Right.
And so if someone wants to roll, now they don't have to. I lose that transaction revenue from my perspective as an exchange, and so there's some risk there. And so I think all those different factors play at whether or not we will or won't. I think it's a really interesting product, and I think it could be really interesting for the future of at least crypto in the U.S. Whether or not it gets applied to other assets, is TBD.
I always wonder what innovations crypto will seep into traditional market structure. Another one is obviously the stablecoin, and I want to ask about this because you said you have USDC on the platform. I assume that means I can trade the other 4 non-stable crypto assets against USDC markets if I want, or I guess it doesn't really matter. It's an equivalent. Can I do deposits and withdrawals at Cboe Digital in USDC stablecoin?
You can bring it and you can buy other coins with it, or you can sell coins for it.
Yeah.
But we don't integrate the books. They're still separate, right?
Think of it as its own coin, basically.
It's its own.
But you can send it out to me. I could operate solely on the stablecoin. I don't have to do wires in and out and stuff. Because this was one of the things I remember early on at Fidelity when I led blockchain research there, we thought about, well, wow, these networks in many ways, even Bitcoin, which is, comparatively slow compared to some other blockchains, is almost lightning speed compared to Tradfi.
Compared to dollars.
Yeah, exactly. Or equity settlement, or any of the existing, not the trading in Tradfi is quite fast, but the settlements and and so we said, man, and this is 2016, and Tether was probably 10 million in the supply. Now it's 100 billion.
Yeah.
And there's probably 140 billion total US dollar denominated stablecoin supply today. But it was so early, and we were saying without the dollar leg, we can't really offer robust on-chain folk. I mean, you can wire us cash and we can sell you Bitcoin with dollars, but the Bitcoin will arrive or be sent almost immediately. Yeah. And the dollars will take more time to arrive or be sent. Do you see a wide adoption eventually? I mean, isn't a public blockchain just a much better rail for dollars than other technologies?
I think ultimately end state something like that, yes, whether it's a stable coin or what we call stable coins today or something different, tokenized money market fund or tokenized deposits, central bank digital currency. I don't know on that one, and the opinions vary significantly as you talk about each of those.
They do, yeah.
Right. But I think that the challenge today is stable coins aren't regulated the way some of the other collateral vehicles are in traditional finance. And so I think there's potential for additional risks. I'm not saying there is But I think from a risk management perspective, you look at that and say, oh, there's additional risk there. And so I think that's probably why maybe the adoption hasn't been as fast. I think internationally it's different because there's the dollar system in the U.S. is so strong. Dollar is still really what I'll call king when it comes to settlement, even potentially even globally.
Right.
And so when you bring on something that isn't dollar denominated, like USDT, you've seen a wide adoption, but that's also because it's traversing jurisdictions, currencies, and so there isn't necessarily the same widespread adoption of another currency as there is maybe the dollar globally. And so I think, you know, that's maybe why we've seen it work so well internationally. Tokenization, which is, you know,
much bigger,
the newest hottest topic, right? The last 6 months.
Everything old is new again.
Right, exactly. It was hot a couple of years ago, I think, if I remember. And but that to me, you talk about what crypto can bring to traditional finance. It's maybe not like the coins themselves, maybe not. I don't know. That's really interesting. It's the technology, right? How can we leverage DLT blockchain technology in the way our system works today to make it better, right? So a lot of people talk about atomic settlement. Is there a use case for it? Depending on the asset, sure. Not every asset. I don't think I'll see in my lifetime single stock equity settling atomically, but maybe. And if we do, I think the cost of those equities from a spread perspective that you get when you cross it will be bigger because market makers lose a little bit of efficiency if you make them deal with their capital atomically. But there's probably some medium between where we're at. We're going from T2 to T1 now. Does it get better than T1? You know, maybe this technology can help. Tokenized fiat or collateral, I think, is really interesting in the sense of like, how do we make it less expensive and friction and remove the friction from the ecosystem for the purposes of settling transactions, right? It doesn't have to be trading crypto or trading equities, just transactions. Like, you're going to give me this and I'm going to give you that. And that is going to be dollars. But instead of me sending an ACH or a wire, handing you dollars, like, am I giving you some token that's in lieu of it, whether it's a central bank currency or a token that represents something that's held in some transfer agent or whatever? You know, there's probably a lot of different ways that can go. I think that's likely the evolution we'll see in the future.
Yeah, you could see that. That seems plausible.
100%.
Not too, with regulation or clarity around stablecoin, right? Safety, adoptability, et cetera.
Regulation on stablecoins could really push stablecoins really to the forefront of that. If we see lack of that, then I could see tokenized money market funds or tokenized ABSs or something like that, which is like, you know, very trusted, has a strong regulatory framework around it, could actually leapfrog stablecoins.
All right, so you run a centralized exchange with a bunch of great features, both from crypto and from the long history of traditional exchange operation, as we've discussed. What do you think about DeFi? Aren't you the exact business that the crypto Puritans think should be disintermediated itself? Will it ever happen?
Yeah, so the first part, yes, I think I am the exact business or running a business. That's the exact reason why, you know, maybe Bitcoin was formed in the first place.
We talk about CCPs and trusted intermediaries for settlement. Like, you know, Nick Szabo says that trusted intermediaries are security holes, right? Like there's a core ethos of attempting to remove as many trusted intermediaries as possible. Do you think trading, though, you know, obviously DeFi is sort of its own ecosystem and has grown quite large, but like, you know, box kind of. Yeah. You haven't seen the principles or technology really behind DeFi, the applications seep their way into TradFi. Do you think we will?
I think it depends on the asset, and I think yes, we will. I don't think it should be all or none. I think there are definitely probably lots of pockets of quote unquote finance that DeFi probably can do really great things in, and I think we probably will see that over time. Do I think that I'll use single stock equities again as an example? Right. Do I think single stock equities are going to trade in a DeFi-like manner in the future? I'd probably take the other side of that. I might be wrong, and that'd be really interesting. I just think about all the things in line that have to be solved for that to actually work and what the costs are. Like, not everything gets better. If you change something, there could be a cost, right? And so you add all that up, I'm not sure I see it. But to answer, I'm not against DeFi, and from my perspective, obviously, I run a centralized exchange and clearinghouse, so maybe I should be against DeFi. I think the technology is really interesting, and I think what it can solve is really interesting. It's just I don't want to boil the ocean with it. I just want to say, okay, maybe over here it works really great. Let's figure out how to do that in a trusted, transparent manner with oversight. Maybe that adds a lot of value to the participants, maybe with not a ton of friction, and that could be really interesting, right? But and so those are the types of evolution I think we'll see over time.
I mean, it sounds like Cboe Digital is well positioned in between traditional investors and exchange users and cryptocurrency networks and assets, right? So like it makes sense. You think about it more as a bridge. Maybe there are pieces from each, right? But it wouldn't make sense if you went full DeFi, you convert Cboe Digital into like an automated market maker like Uniswap, then you probably lose a lot of your traditional users because you're building it for them primarily to give them access to this innovative asset class. Makes a lot of sense to me. But I do wonder that too, by the way. I don't see any clamoring in traditional finance, any part of it, to have DeFi come into TradFi, quote unquote. I see demand for on-chain pulling in traditional assets, like real-world assets we talked about. There's plenty of that. Yep. I don't see anyone that's waking up saying, oh my gosh, I would like that is in traditional trading or equities or any part really. Although I think FX would be very interesting on chain. I think that actually, because it's global, it's not really regulated in that way.
We haven't talked about FX.
No, I mean, well, let me ask you that one then, because I've always thought this was a great candidate for something like a tokenized decentralized market, because FX is basically not regulated, and it can't really be because it's by definition cross-jurisdictional.
Yeah.
I'm sure there are rules like, about how different like entity types like a broker-dealer or a custodian or something handles FX. That's different. But the trading of it is inherently international, right?
Yep.
There's no international market regulator, really. There are standards and whatnot. But like, does that seem like something where, you talk about tokenized fiat, like doesn't this seem like a lot of it's swaps? I mean, and obviously there's other markets, but like it seems like this thing could move, would make a lot of sense on chain in some ways, because like FX, it's, public blockchains are global, decentralized, et cetera.
Yeah, I mean, I think that definitely very interesting things in the FX space. It would be interesting to see if, like, as an industry, we kind of look at FX. I know sometimes we get focused on certain parts of the the broader market and say, okay, let's do bonds, or let's do collateral, let's do real estate, or let's do we haven't really looked at FX. So that's really interesting.
I haven't really ever heard of anyone focusing on it.
Yeah.
But it does seem to make sense to me in some ways, and especially again because like FX is cross-jurisdictional.
Yep,
right?
it's very similar to crypto in that sense. It also similar in market structure in the sense that you have a lot of, there's no no best X if we compare it to equities, right? There's a lot
of over-the-counter trading,
no consolidated tape that tells you everything. It's all a lot of OTC. There's obviously some ECNs and Disclosure Cboe operates Cboe FX, which is in the FX business. There's a lot of overlap, similarities, whatever, with FX and crypto, and that's why I think you've seen a lot of FX players get into crypto earlier than a lot of the other traditional players, because there's so much similarity
there.
Lots
of FX commodities types love crypto for this reason. I think it makes a lot of sense. Before we wrap, John, what is your bullish view on what are you guys looking forward to at Cboe Digital, and what makes you want to work? I mean, you've been in the equity markets, equity derivatives markets, you've built exchanges, you worked on an international exchange. You said out of Bermuda, which we won't even talk about, but I love Bermuda. But people don't realize incredible financial leader, Bermuda, huge in the insurance world. Yeah. But you've been working on this for a while. You now lead Cboe Digital. So also not just what is Cboe Digital looking forward to and thinking about why did you acquire RSX? Why are you building all of this? What is your bullish view of this market? Yeah. And also what is your bullish view on these assets?
Yeah, so from a Cboe Digital perspective, I think it's the continued evolution of the ecosystem, right? Spot Bitcoin ETF approval was, I think, fantastic. Obviously, we want to see more continuation there and more development. Anything we can do, or working with partners that can continue to bring more of the buy side and the traditional folks, sell side, prime brokers, traditional custodians into the ecosystem, I think is going to be overall net positive. And so that's really where we see the opportunity. Also derivatives, we didn't touch a ton about derivatives,
Right.
but we're very excited about derivatives. We just launched futures in January. So we have futures on Bitcoin and ETH, and we'll continue to build out not only that ecosystem as we onboard participants, but also new products. So we talk about being, kind of crypto native and TradFi at that intersection. So that's really how we think about our product development as well. And that's not just like, what order type are we going to bring, but it's more of like what products can we list and trade, and how can we really drive, U.S. innovation in kind of this crypto derivatives world. So, we're very focused there as well. I'm very excited about kind of what that opportunity looks like. Tokenization, I think, on that, it's called the third leg. You have the spot market, the derivative market, maybe tokenization, seeing how I think we really expand collateral for the purposes of just making it more seamless and removing friction from the value chain for our participants. I think we're really focused there as well. Personally, I hold Bitcoin disclosure, so obviously that the halving and seeing the price go up is I'm not going to frown at that.
Up a lot. Up even like just from 30 days ago, up almost 30%. It's crazy.
Yeah, we've seen a massive run. I think the low was like 17 or 16,000.
16.5, I think is what I called it as. But
the number was, so quite a big rally. How much more do we have? Hey, I'd love to see it higher than the last high. I'm not going to make a prediction because I'm not in that space. But whoever's predicting the highest number, I like.
You're fine with that.
I'm like, hey,
that'd be great.
You want it to go to 1 million, so do I. Who that holds it doesn't, right?
Yeah.
Just from that perspective, I think why I'm obviously would be bullish on the price because I just we have the halving, we saw the Bitcoin ETF, and so I think that just generates participation. Broader participation. Obviously, the halving might have different types of economic input to the price, but general awareness, people migrating or
I call it a quadrennial
approaching it.
Marketing event.
Yeah, I think
it shows Bitcoin's transparent, credibly neutral, supply schedule, basically, which is pretty unique. All right. Well, John Palmer, president of Cboe Digital, thank you so much for coming on Galaxy Brains.
Alex, thanks for having me.
That's it for this week's episode of Galaxy Brains. Thanks to my guest, John Palmer, president of Cboe Digital, and our friend Beimnet Abebe from Galaxy Trading. As always, I hope you enjoyed the episode, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.